Welcome, folks. It's me, Chris Thompson, again, presenting Beyond the Numbers to you. And last time I did this on the budget and taxation was with my very esteemed friend and colleague, Mr. Tom Biggs, our tax specialist. Tom, how are you doing?
Yeah, good. Thanks, Chris. How are you?
Excellent to hear. Yeah, not too bad. Thank you. Not too bad. Now, obviously, because we did this back in October of 2021, quite a lot has changed since then. So, obviously, we have a new monarch, which you weren't expecting me to say. But we also, obviously, we have had a new prime minister, not once but twice. So we now finally have former Chancellor Rishi Sunak as prime minister, and Mr. Hunt has come in as Chancellor. And in that time frame, obviously, it's become very apparent that there is a big hole in the government's finances. Namely, it is running what we believe is a budget deficit of about 60 billion projected, I might add. And therefore, the idea that the former Prime Minister Liz Truss had of tax cuts and an increase in spending with regards to energy, helping people with their energy costs, people and businesses, wasn't seen as viable by the markets because of this big potential hole in the government's finances. And so therefore we now face the prospect of another budget coming in a couple of days. And the question is, how do the government plug the gap? So I think that summarises it sort of, Tom, with our new Chancellor and Prime Minister on board. Question is, what is Mr. Hunt going to do or potentially do? And on that note, sir, over to you.
Okay, so if we start off with, let's start with corporation tax. I guess that's probably the easiest one. So as already announced, the headline rate is going ahead in April 23, going ahead in the sense that it's going to increase to 25%. We're not expecting a big change from that or any big announcements in respect of that this time round. The only thing that potentially could be brought in, which is obviously going to only impact a small number of large companies, would be the windfall tax on oil and gas companies potentially being extended out past the end date of December 2025. But obviously this is only going to impact a small number of companies, like I say. So no big expectations from a corporation tax perspective.
So corporation tax, as Rishi originally planned for it when he was Chancellor, it will go up.
Yeah,
April 23. Correct. That's the key point.
Yeah, correct. So if we then move on to income tax, again, as already announced by Jeremy Hunt when he came in, the reduction in the basic rate of income tax will not be going ahead as was previously announced under Liz Truss. Now, what he has said is that will not be going ahead indefinitely. So actually, there's no expectation at all at the moment that's going to fall. Again, given the backdrop, we can't see that changing. So if anything, what we'd be expecting probably would be further freezing of allowances and thresholds out past the already announced date of 2026, I think it is. So possibly there. What we have seen being reported is possibly the additional rate threshold at which taxpayers start paying 45% income tax being reduced. It's currently set at £150,000. It might be reduced, so more people might be brought into the additional rate.
Wow.
And in addition to that, it's obviously quite a hot political point at the moment. There's discussion that possibly the non-dom tax status could be scrapped, which would bring certain individuals' worldwide income into tax in the UK. So broadly, that's possibly what we might see next week.
Now that non-dom is a real hot potato because there was all this stuff about Rishi Sunak's wife being a non-dom, but anyway, quick one: basic rate. Where does that kick in, and what percentage, please? Just for
basic
everybody.
Rate kicks in. So it's 20% rate. It kicks in once your income is above. It's around about 37,500. I can't remember the exact figure. It's changed slightly, but when your income goes above £37,500 after the personal allowance, it then kicks in. So in broad terms, your gross income can be around £50,000 before you then kick into into the
That
higher
tax
rate
band.
because of the personal allowance.
Yeah. Next one, Tom.
Next one I've got on my list is inheritance tax. Now this
Hot potato, this one.
yeah,
Another one.
So the nil rate band, which is effectively the IHT allowance, at which point you don't pay any IHT, has already been frozen until April 26, similar to the income tax rates. Might well be linked to income tax that this is pushed out further in terms of that freeze. So other than that, we can't see many other changes. Now, the only thing possibly as a bit of a spanner in the works is back in January 2020, there was an all-parliamentary group that looked at inheritance tax and whether it needs to be sort of looked at and reformed. Part of the outcomes of that was recommendations that certain reliefs in inheritance tax were abolished. Which were mainly, as I understand it, the gifts out of income relief, the 7-year gifts drawn lifetime relief, and also BPR and APR. So no sort of increases again in rates, but possibly looking at amending reliefs to increase the tax rate, tax intake that way.
Obviously, very sophisticated tax. We've done videos on this in the past, and we've got a whopping great big blog post that goes into detail about how it all works. So if you're wondering what Tom was talking about there, be sure to check out our inheritance tax blog. Excellent, Tom. Thank you. So what's next? What might he raid next? I say raid.
Pensions relief has been on the radar for a little while now, to be honest. Again, there's no reason to think that couldn't be looked at this time round, again, given the backdrop of the deficit you mentioned earlier on. So a possible prediction is that he could cut the tax relief for higher and additional rates earners on pension contributions, so effectively only give relief at 20%. As I say, that's been on the agenda for a little while, so could come into play here. Obviously, the downside of that would be that it then reduces the incentive for people to save into pensions, which could obviously sort of increase the burden on the state further down the line. But that's been mooted for a bit, so that possibly could come up next week.
Sure. And what do we got next? Capital gains tax. No doubt that's a wealth one and one to raid.
So my sort of last prediction then as part of this. Now, when Rishi Sunak was Chancellor, he actually commissioned a report by the Office of Tax Simplification to look at whether capital gains tax needs to be reformed. The outcome of that was that they had suggested that capital gains tax should be aligned with income tax, which would be quite a big change, and it's something that we spoke about before. And the rationale for that is that certain individuals have been able to effectively convert income into capital gains and pay a lower rate. And actually, there was a notorious hedge fund manager back in 2007, I think, that went out proclaiming that his amount of tax that he paid was lower than his cleaners or something like that, because of this sort of loophole, if you like. So
charming.
So given Rishi Sunak commissioned that report when he was Chancellor, was obviously keen at looking at that, I wouldn't be surprised if capital gains tax is looked at here now that he's Prime Minister. Mm-hmm. Again, given the value of the assets involved, it would be quite a big tax intake. So we could either see rates going up to align with income tax as suggested, or there were reports also that the release could be tinkered with. So, for example, the annual exemption could be reduced from the current rate of about 12,300, I think it is, down to about 5,000. I think I saw being reported. So could be one or the other, or possibly both. But I'd be surprised if capital gains tax isn't back on the agenda.
Well, as a wealth tax, yeah, it's going to be prime, isn't it, given the scenario? So,
yeah.
Any others, Tom?
So they're my main ones. The only additional one that I've seen recently actually was in regard to property income, which kind of links back into income tax a little bit. There was a report by the Office for Tax Simplification that was published last month in October that looked at reforms, obviously, to property income, and in particular furnished holiday lets. So the outcome of that report suggested that actually the government could look at furnished holiday lets and whether that particular area of the tax legislation is still fit for purpose and possibly abolished at. Furnished holiday lets, for a bit of context, provide certain tax reliefs for rental income where certain conditions are met. So what's being suggested is that possibly that could be abolished, and instead something called a bright line test is introduced, which basically would look at rental income and whether actually it's more like a trade, so effectively like a business, which is kind of what a furnished holiday let broadly looks to do at the moment. But the conditions would be a bit tighter. It would look at how long, for example, the taxpayer spent on that business, the number of properties that were let in, that kind of thing, and it would be brought in as effectively a sole trade business or partnership business, whatever it is. And if it didn't get brought within that, it would just fall within the general rental income that's already in existence. So a possible change there that may impact some taxpayers.
Excellent. Okay, Tom. So, well, obviously, this is all going to be designed, they hope, to plug the 60 billion annual gap between tax revenue and government expenditure. Of course, that gap may be bigger or smaller because a lot of it is based on predictions or projections. So, who knows?
Time will tell. We'll see.
Well, yes, the economy might perform better and they might get better tax revenue, and that might not be a gap that needs to be plugged quite so much. So, be interesting to see, or it could be worse. On that bombshell, I'll say thank you very much, Tom, and we'll revisit this on the 17th after the budget. So be sure to watch our blog, social media, and all the various bits of Wellers and our communications, and be sure to subscribe to our newsletter for plenty more of the above. Many thanks, Tom. Cheers. Bye.
Thanks, Chris.